What is going on, everybody? Set back again with another YouTube video, and in today's video I'm going to do a live trading session with you guys. Not the entirety. I'm just going to really show my analysis. I'm going to skip forward into when I'm actually taking a trade, and then I'm going to I'm going to do that. I'm not going to show the entire hour, 30-minute, whatever, however long the session is going to be. But yeah, I literally just woke up 10 minutes ago, so that's why I'm wearing glasses. I usually wear contacts, so why my hair is not done and everything. But yeah, I'm hopefully I actually take a trade, and hopefully I win that trade, inshallah. Um, yeah, so I can show you guys. I'm gonna post a video whether or not I win or lose a trade, but hopefully I actually take a trade, so this isn't just a waste of a video, and so I don't have to come up with another video idea. But yeah, let's get into the charts. I haven't even opened the charts yet, so let me share my charts with you guys. Okay, cool. And so yeah, let's look at what. Okay, I don't know why freaking Zoom is having a stroke right about now. How do I move this? Okay, I'll just move this up. I don't know if you guys get to see this, but it's a Zoom thingy. All right, cool. Now we got that out of the way. Okay, so this is a 1 minute chart. We're definitely bearish for sure. Just look at the 1 hour, right, real quick. Again, you don't have to look all this way into the 1 hour. You can literally just zoom into the last couple of hours. I would say the last 24-ish hours, give or take, right? The last 24 hours. And look at what market structure was doing, right? So we went down, right? We broke market structure to the downside, okay? And that's indicating bearish momentum, right? So now we pull back, and what do we see? We see a low being made, right? And then we see a high. So let's mark that out real quickly for you guys, just so it's easier, right? And then a low was made right over here, right? So what ends up happening between this high and this low? After this low was originally closed below, right? So this low is closed below. We're in bearish market structure, correct? So we're only looking at sells. Now we get a pullback. We have another high and another low made, and so we need one of these highs and lows to be broken and closed below or above to get our trend direction, right? What ends up happening right at this candle over here, the 2 o'clock candle, right? What ends up happening is that we close below and we continue melting downwards. Okay, so what are we looking for? Since we closed below market structure and we close below low and continue going downwards, we're looking for sells. All right, cool. On the 50-minute time frame, it just confirms that. On the 5-minute, again, it just confirms that. What I will say is that there was news that has come out at 8:30, so let's take a look at that. At Forex Factory, this is where I get all my news from. A source to get news tells you everything. But yeah, high impact news, guys, it definitely moves markets. So I only pay attention to high impact news. I don't care about yellow photos. I don't care about orange photos. I literally only care about high impact news. But real quick, let me see. Is there any news on 10 o'clock? Okay, cool. Sometimes what ends up happening is that Forex Factory will show like a yellow or an orange folder, but then if you go to Trading View, it'll actually show a red, like high impact news bubble. So yeah, you really gotta be careful of that. But there is none. I just checked. So yeah, so there's none. So as you guys can see, this is the actual and this is the forecast, right? And it's green, which means that this is good for the US dollar, correct? So what ends up happening is that if this is green, if high impact news is green, that means that it's good for the US dollar. If it's red like this, that means it's bad for the US dollar, right? It doesn't really matter what the numbers are. It really matters as to whether or not the numbers are good or not, right? So looking at the high impact news, we see that it's green. So what that means is that it's good for the US dollar. Now, when things are good for the US dollar, right, people don't want to actually, I'll go back. Yeah, I'll just talk about news for really quick. But people don't want to invest their money elsewhere, right? Because their purchasing power is strong, right? Their purchasing power is strong, which means that the US dollar is strengthening. They can purchase more things. They can purchase more goods. They can consume more goods, right? That's the whole basis behind it. Whereas if the US dollar is weakening, right, for a variety of factors that could be with inflation or anything, that means that they're losing their purchase power. So people start investing their money elsewhere, right? That is when investing happens, right? When the purchasing power is very, very low, that is when people start investing their money. All right. So in terms of inflation, right? When inflation is at all-time highs, right? What ends up happening? People start investing their money elsewhere. That's why during COVID, right? Inflation was super high. That's why in 2021, right? The stock market was through the roof, real estate was through the roof, crypto was exploding, watches were exploding. Every investment was exploding because people were losing their purchasing power, so they had to shove it elsewhere to make sure that they weren't losing their money, right? And everything else exploded because there was so much demand for it. And now, guess what? Interest rates are always increasing. The federal government is increasing interest rates. Inflation is going down. The US dollar is strengthening. So guess what ends up happening? Because the US dollar is strengthening, people want to hold cash so they can purchase more things because it's only going to get stronger. And once everything gets stronger, inflation goes down, price goes down as well, right? So because of that, you can buy more things. So that's why all these things, that's why stocks have crashed, crypto has crashed, and real estate is going down. Okay, now let's get into my analysis because I've spent too much time talking about news. But yeah, we're looking for sells only. There's buy side liquidity over here, and there's buy side liquidity over here. I'm looking for one of these two to get swept, hopefully both of them. And then I'm just looking for a break of market structure, and then I'm just going to look for a candle close below market structure. Sorry, I'm looking for liquidity seek, break of market structure, candle close below market structure, and then a fair value gap. And that's what I'm looking for. And I only look for these liquidity seeks after market is open. So hopefully market opens. But yeah, that's why, as you guys can see at 8:30, we had this gap down, and then we had a continuously strong run down. It's because what ends up happening is that since the market was strong, since the news was good for the US dollar, right? People are going to strengthen their reserve in the US dollar, and they're going to hold more of the currency, and they're going to stop investing as much in the stock market. Hence why the US 500, the S&P 500 index is going down in value. Now, with that being said, I'm going to stop sharing for a little bit, guys, and I'll get back to you guys after in a bit when I contemplate taking a trade in. Okay, so peace out. Okay, guys, so if you're wondering why my camel card just suddenly started to suck, is because of the fact that I plug in my microphone and my camera that I use for recording YouTube videos through the USB, and I also use this thing, which is the magic keys, in case you can tell, and that uses USB as well. But anyways, my side liquidity just got swept, so now what we're waiting for a market structure to be formed. Well, actually, market structure already been formed, right? So if we go over here, bam. So what we're waiting for is this market structure to be broken, and then we're target. I have no idea what to target, so we'll have to figure that out. And there's literally nothing, actually, at all. That's cool. Okay, there's literally nothing that we can target. That's great. Cool. I guess we'll look at targets later. I don't want to look at targets later though. I guess this could be TP1. And then I guess this could be I guess that'll be TP1. And then I guess in case I need more profit targets, we can go over here. Nope, that's not what I meant. Over here. Although there is a fair value gap, so I could look at the halfway point between this FVG as well as a potential profit area. But let's go back to the 1 minute real quick. But so now we're looking for a break of this structure. Again, I would hopefully like there to be a bearish candle and a bullish candle so that the low can be moved up, because currently this is the low, so we have to break this. But yeah, let's see what ends up happening. Hopefully we do get that. We got a bearish candle, so now all we need is another bullish candle, and that'll act as a low. Okay. So, but yeah, I'll update you guys when something else happens. Okay, so as you guys can see, we are getting rejections off this liquidity. I don't know if that's the right term. I know rejections is usually a form of resistance term, so maybe a lot of SMC guys don't like that. But yeah, literally just waiting, guys. Literally just waiting. So okay, so now we're getting a little bit more to the downside again. All we need is one bullish candle. That'll be a new low. But if not, wait and just wait for this low to be broken here. Right. So the way the lows work, guys, just to give you a quick explanation, is that I just based it off bearish and bullish candles and like patterns, right? So for instance, we had a bullish candle over here, we had a bearish candle, and then we have bullish candle. Right? So why is this so low? Because we went down and then we went up. Right. So now over here we went down and we went up, but it's about the same exact point. Over here, down and up. Over here, down and up. Right. So what ends up happening here is that this is our new low, right? And then we broke structure to the downside, but then we continue going up, right? So this is a good candle. We can now move our structure up here. But right, so what ends up happening here, though, right, is that even though we broke structure to the downside, we just kept on going up. So sometimes that's going to happen. But other times, what ends up happening is that when we break structure, we really break structure, right? So for instance, over here, if I move the line over here, we broke structure to the downside, we continue going down. Right, over here we didn't break structure. So guess what? We broke structure to the upside down, we continue going up. Right, over here was structure, broke it, but that didn't mean nothing happened from there. Broke structure to the upside, we continue going up. Right, over here is a low. This is this. And we went down, we went up, another low, and then we break structure to the downside, and we continue going down. You see, so most of the time it does work. Obviously, there are going to be times when nothing works. Right, nothing's gonna have 100%. Otherwise, you could just scalp this. Right, but this is our new low again. Why? let's see, we had to move up, we had to move down. This was our previous low. We had to move up, we had to move down, and now we have another move up again. So this is our low now. So what I'm waiting for is this structure to be taken out. And as you guys can see, well, I don't think we'd count this as a liquidity sweep, honestly. No, we would definitely would. Okay, so by 0.1 pips, this has swapped liquidity of this as well. So that's good. That's just helping our resolve in this situation. But yeah, one of the reasons, because this is ICT's 2022 mentorship model, and I just want to keep on talking a little bit more before I pause the video and update you whenever I take a trade, hopefully, inshallah, and win that trade, of course. One of the reasons why I switched to this model is because if you guys remember, my previous videos were on Ichimoku, and that was like the main style I've been trading for a very, very long time. I was trading other strategies, of course, and I was documenting those to you guys as well. But that was more so just to teach you guys that, hey, these are a bunch of profitable strategies that you can use that I know are profitable because I've personally used them, right? But I quit. My main focus, my main hustle was always trading with the Ichimoku indicator. And the issue with that was that it was a great indicator, it was a great strategy. It was still profitable. I was still able to make money from it. But I was just taking so many trades. It was a mental toll to be taking 8, 10 trades sometimes, right? And even if you're risking 0.5%, there were days where I lost 3%, 4%, right? There were days where I had made 3% only for me to lose it all in the next trade. And then the next 4 trades I took, right? And your edge, then what you might be thinking, right, is that, well, if you were off 3% on the day, why didn't you just stop trading? But, your edge says that you shouldn't do that, right? Your edge says that you should be taking every single step you take because over the long run, you'll win, right? Because you could flip that, right? When I was at 1% for the day, why didn't I stop, right? Why did I go all the way until 3%, right? You just never know when to stop. You never know when your edge is always going to be really well, because there were days where I made 6% in a day as well, right? But the mental toll of taking, even though it was a completely objective strategy, I never had to think about entries. I never had to think about stop losses. I never had to think about profit targets, right? Even aside from all of that, it was just the toll of taking 4 to 10 trades every single day, day in, day out, every single week, was just getting to me. So that's why I'm switching to this strategy instead. Because of this strategy, I'm only taking 1 trade. If I lose that 1 trade, then maybe I'll take a second trade. And even that's not like necessarily guaranteed. Sometimes I don't even take that second trade, right? But I'm only taking 1 trade. I mean, this entire week prior, this week I've only took 1 trade, and I'm up 2.3%, mashallah, for this week, right? To be up 2.3% in the previous strategy I was using, I was taking probably like 30 trades, 20 trades, right? To be up 2.3% for the week. And I was trading every single day, right? But yeah, that's one of the reasons why I switched to the strategy, and I'm trying my hardest. I've scaled down on my account because I really want to stick to the strategy, get really good at it, and then start scaling up again, like I did with my previous trading on the Ichimoku indicator. But I'm not used to this trading style. That's why I've scaled down a little bit more. But yeah, so now what we're seeing it come down. Yeah, so this is just the low that we have to break. We're just waiting for a candle closure below. We're not waiting for wicks. Candle closures below, right? That is what we're waiting for. That's the important part, right? Because if we don't get a candle closure below, we're not taking the trade. Simple as that. There are a lot of times when you can get faked out by not waiting for candle closures. That for a second, because we have now finally gotten a candle closure below. We're here. How's that, guys? So now what I'm waiting for is I'm just essentially waiting for price to hopefully make a fair value gap, which it's doing right now. So price closes like this, right? The fair value gap would be looking something like that. So I would wait for price to tap into this fair value gap again. And then I put my stop loss above these highs, and then I take profit at that price point, whichever it was, right? So yeah, let's see what ends up happening. And you know what I'm gonna do? I'm gonna pause recording for a second. Okay, guys. So I don't think I'm gonna be able to take a trade, because this was my first take profit. So if my first take profit gets hit, right, that's when I close the trade, right? So if my first take profit gets hit, then even if it goes back to the fair value gap, what's the point? Because my first take profit's already been hit. This is liquidity. So if liquidity swept to the downside, then it's only going to go up again, right? Or it might go up. There's a potential. The entry that I was looking for after the candle closure was this FVG, correct? And so do that. We'll write it, right? It would be this fair value gap. Okay, it doesn't even say FVG because the thing is so small. But right, we had a candle closure below market structure. This was a low. We closed below. We made a fair value gap. So what I was looking for is price to get back into that fair value gap and then enter. You could have took it, and I could have took it also, but straight off the candle closure below market structure, but I always make more profit targets even after, when I wait for my fair value gap. And so that's why I was waiting. But it seems as though what's going to end up happening is that I'm not going to be able to take a trade today. What will probably end up happening is that it's just going to hit TP1. Yeah, TP1 at a 1-to-1 restore ratio without even getting my entry, which sucks. That sucks. But it is what it is, guys. Sometimes this is going to happen. And yeah, it just smashed TP1. So no trade for me, unfortunately, guys. Dang, that was a nice trade too. That's tough. That's tough. You know what I could have done? If I took it off candle closure, right, it would have been a 0.87 restore ratio. So I would have just moved my stop loss break even and targeted 1-to-1 anyways, and that would have just got hit too. So that sucks. It is what it is, guys. But yeah, I'm not gonna take a trade anymore. Even though again, this is sell side liquidity, so what could end up happening is that it could just let me get the errors out. Right, it could have sweep sell side liquidity. Make market structure. What is stuff? Make some market structure over here. Close below market structure. Give me the fair value gap, and then I'd be targeting these highs if that happened. But I'm just not gonna do that, guys. Because my first trade is usually the trade that works out the best for me from my testing, and so this would have been the first trade. I never got the retracement to the fair value gap, so I didn't take the trade. And yeah, it is what it is, guys. You're gonna miss out on trades, but you have to follow your strategy as best as you can. Because again, even with my testing, even though there are trades where I do miss out like this that would have hit my profit target, right? It's just now worth it to chase those trades because over the long run, my profit is severely decreased by using these, by using a candle closure instead of waiting for the retracement, right, guys? Because yeah, no trade, unfortunately. It is what it is, guys. Yeah, that's about it, guys. See ya. Hope you guys like this live recording, even though I didn't take a trade. Peace out, guys.